Welcome back, everyone, to Capital HQ, where for this session, we're going to be diving into the heart of tech due diligence. Joining us is Chris Philipps, founder and managing partner at Philipps Byrne, named synonymous with excellence in the tech due diligence industry. Since 2019, Chris has been at the forefront of guiding funding and strategic technology assessments, helping startups and investors alike navigate the complexities of the tech landscape. He has been an interim CTO for a long time in various different organizations, so has a lot of experience there. With a career spanning over 2 decades, including roles as an engineer, CTO, and now as a leading advisor, Chris brings a wealth of knowledge and insights. Today, he will share his expertise on what makes tech startups succeed, the nuances of tech due diligence, and the future trends in technology investments. Get ready for an enlightening conversation full of actionable insights. Welcome, Chris.
Happy to be here. Thanks, Hugo.
Great. Look, let's get stuck in. And before we dive into the depths of tech due diligence, could you share a bit about the ethos and mission that drives Philipps Byrne in the tech advisory landscape?
Yeah, absolutely. So we always say we help founders and investors build the world of tomorrow, and that probably sounds like a huge ambition, but in the essence, that's exactly what we do. Yeah, I mean, the way I see the startup scene is that we really use the opportunity to build another world, to build another future, hopefully a better future. And having been already part of the startup industry for more than 20 years, that's always my ambition. And by advising investors on one hand, but also advising founders, entrepreneurs on the other hand, that is definitely our mission, that we want to help build that future. Apart from that, I mean, we have this mission in place, but also we have a kind of prime directive, principle number 1 in our company, and that is zero bullshit. You all also find that present on our website. And we not only write it, but we actually mean it. It's our moral compass for our work, but also for our own company.
Okay. And where did this zero bullshit philosophy come about?
Yeah, that comes from my history as an interim CTO. I once had a colleague from the US who had worked with me for a couple of years, talking to me over a beer, and he gave me that feedback. He said, like, you know what I value most about you is like you're absolutely zero bullshit. I always know where I stand. I always know this is the truth. Yeah, and then we can operate based on that. And I like that feedback a lot. And I think I made it to my own personal first principle, and then I introduced it also to the company later on.
Yeah, and it's one of the things I've taken on when I started working, because I work with a lot of founders. I help them with their due diligence materials, not to the same extent as you do, but I do that as part of my everyday day-to-day role. And after 5, 6, 7 clients, I was like, look, I'm gonna be very brutal with you because it's better it comes from me than it comes from a potential investor. And at the start, I was a bit wary of saying that because it kicks off the relationship between a business and a client a bit off. But today I use that every time I get on a call, and they seem to enjoy it. So I relate to your zero bullshit. Well, look, with over 2 decades in the tech and startup ecosystem and now leading Philipps Byrne, can you share how your journey has shaped your perspective on tech due diligence?
Yeah, I started as a typical techie, I would say. So I used to work as a software engineer for quite a while and had various other roles in engineering before I eventually became a CTO and then an interim CTO of more than 10 years. But still, I had this typical tech perspective. And then when I had my first due diligence, not as an auditor, but on being on the other side of the table, that was really an epiphany for me, because suddenly I got confronted with what the outside world would consider as standards. And I think that was a very valuable lesson for me. Fortunately, we got the funding. Fortunately, the startup grew. Nevertheless, it made me think a lot about like from a higher perspective on what actually a good technology organization needs to bring to the table. That was one aspect, but the other one, and that is probably even the strongest driver, I had to endure throughout my career a couple of, let's say, bad tech DDs. In that sense that for me as a CTO, it was an absolute waste of time. And the insights were very, very limited. And there was almost no feedback whatsoever for me and my team. And I found that a pity because we invested a hell of a lot of time into preparation for that tech DD. And in the end, we left with nothing. So I swore to myself that if I ever would perform a tech DD, I would try to turn it around and set it up in a way that it's highly valuable, not only for the investors, but also for the startups, for the teams being involved. I always say it's the most thorough and most honest feedback that you can get as a founder and as a CTO. And we try to stay true to that principle.
Yeah, and I mean, it's interesting having sat on both sides of the table. And I think next question is, how do you believe the diversity of thought, right? Because I'm guessing when you sit on either side of the table, the way you approach something is completely different, right? But the end goal for both sides is to build something and move together. But how do you believe, having done both things, how do you believe that diversity of thought and experiences enriches your tech due diligence processes and perhaps Philipps and Byrne's?
What I always feel is that we have a different perspective from many, many other consultancies performing DD, especially like the bigger ones, because our team has a different DNA. We all come from the startup scene. We have all worked in startups and scale-ups. And that's a huge difference because we have felt the pain ourselves. And we usually are not business analysts performing a tech DD. We are techies. Yeah? We are engineers. We are architects. We are former CTOs or directors, VPs. And that is definitely something that influences massively our view. But there's also a second perspective that I gained when I became a founder myself. When I was an advisor, I was always like advising CEOs how to build and lead their company. And one day I looked into the mirror and said, like, who am I to advise someone if I haven't built my own organization and my own company? And this was actually the primary motivation for me to build Philipps and Byrne. And that changed my perspective entirely because I suddenly found myself in the exactly same situation, and I did the same things or the same mistakes the other founders did, and what I could watch over the years. And although I knew I couldn't help myself, but making the same mistakes sometimes, and I understood this the thinking better, why founders tick the way they tick. So that was really an eye opener for me, and I think that has also massively influenced our perspective with that regard. That we understand the pain, also the founder's pain, and we can sometimes translate it to investors, but we very often also know what to do in order to mitigate the risks going along with that.
Fantastic. Yeah, being put in the driver's seat, I think can do that. I haven't been there myself, so sometimes I speak to founders and I find myself in this situation where I'm telling them like I've worked with hundreds of companies. And then they're like, yeah, but you've never run one. You know, I have people I have to feed. You don't have people you have to feed. I was like, yeah, fair enough.
Yeah.
But look, for the purpose of this conversation, I think, you know, and this concept has quite a few definitions, but I'd love for you to explain what tech due diligence is and its critical importance in the investment decision-making process.
Yeah, I always like to boil it down to one simple question. Like for me, tech DD is the answer on the question: does tech and product have everything with regards to people, process, and technology that it needs to achieve the business goals? That is what you need to figure out in the tech DD. And if not, what needs to be done in order to get there?
Mm, mm. And given your vast experience, how has the approach to tech due diligence evolved over the years? Perhaps from a founder and an investor's perspective. And that's first part. So maybe we can talk about the last 10, 15 years, your experience, and perhaps we can touch on the rapid technological advancements happening within the last year and a half.
Yeah, absolutely. So I started with like my background and my thinking as a technologist and as a one-person show. And I think that has influenced the first couple of years, especially first 5 to 10, I would say. And this is what I see nowadays a lot. I see many brilliant technologists conducting DDs as a kind of single person show, and nothing against that. It can be exactly the right context for, or the right thing for some context. However, I realized that the more DDs that I performed and later on we performed, and we have performed around like 700 DDs by now. So you could see that the most important thing is having a framework, yeah, having a framework of conducting DDs, but also a framework of standards and best practices you apply, and you benchmark companies against, considering certain contexts, certain stages, certain industries, etc., and also having the data to benchmark the companies against similar companies of that stage, that industry, etc. So that is definitely something that has evolved, I would say, throughout the last 5 or 6 years, and has become a focus in our work. I mean, the last 1.5 years, probably you refer to the big paradigm change through AI. Of course, that has been super exciting also for us. I still remember when the first release of ChatGPT came out. I spent probably personally half a day on just like bombing it with anonymized data, seeing what I would get back as a result. And that is definitely, of course, in part of everyone's discussion right now, also strategic discussion, like will consulting survive? Will assessments survive? How well will they look like 5 years from now? Yeah. So, and I don't think that there's a way around AI, or ignoring it would be a smart idea. However, I think there's, at least for a couple of years, there will be a hybrid approach. And I believe in that hybrid approach. I mean, nobody knows how it will exactly be with GPT-5 or even 6 down the road. But nevertheless, I think there will be still space for heavily tech-supported analysis and consulting, driven by people, or at least aspects of people, such as empathy, expertise, and experience, in order to get the nuances right. And as long as people are involved into businesses, people are the main thing to consider. I mean, I always say, like, it's when I started, I thought it's 90% people and 10% tech. Nowadays, I'm tempted to say the problems are related of 99% to people and 1% to tech, right? So, and as long as there are people, it's good to have also people on the other side of the table. But what needs to be clear, the times for expensive, so stupid consulting, these are over, and that's, in my eyes, a good thing.
Yeah, yeah. And look, talking about this from maybe a different angle, technological advancements, has that made your job harder? Because maybe the concepts are more data hungry. They're maybe a bit more complex. Has that made your job harder in general?
I would say that has made our job even more interesting. I mean, we were in the lucky position that we, I don't have the numbers for 23, but for example, in 22, 30% of our DDs were AI related or deep tech related. And to be honest, although of course the other DDs are also interesting, but these ones were thrilling, especially like looking into companies who are OpenAI competitors and develop their own large language models. I mean, that's super exciting for technology teams, right? So we have built up a certain expertise in the field of AI and are capable of going down very, very deep the rabbit hole. And so with that regard, it has also kind of shaped our understanding of the landscape and has excited us so much that some of my colleagues really, really went into it and built up a really good expertise in it. So we are not afraid of assessing complex technology companies. Sometimes we even go. I lively remember a company in the quantum computing context that was totally innovative back then. And that gave us a pretty hard time from a tech DD perspective because no framework work. Yeah? So, but nevertheless, these are also highlights in the history of each and every assessment company or consulting company. So we love it.
Absolutely. Sounds like it. What are some common misconceptions about tech due diligence that you've encountered, and how do you address them? Maybe we can do this from answer this in two parts. The first one can be an investor part, and the second one can be a founder's misconception.
Nice one. Let's start with the founders. So we see two main misconceptions here. One is some founders understand the DD as kind of a hide and seek competition. Yeah? And I understand that in an M&A context, but let's say I understand that in a highly political M&A context. I don't understand it in a VC investment context or in a very friendly M&A context, because I think it's a wasted opportunity of getting feedback, also on putting the real problems on the table and see how you get along with your future shareholders or even like partners. And so that is something where I highly encourage founders not to play too much of hide and seek and be open and be upfront with whatever challenges are existing. Also, it goes hand in hand with that a DD may be a waste of time, but that is also because not every DD is a win for the team, and not every DD is valuable. So that's more like on the consulting side to change that. On the investor side, my favorite misjudgment is this is the commodity. This is commodity. We don't need a tech DD here. I don't know how many times I heard that sentence, and I think it's wrong. It's in 90% of the cases it is wrong, because I mean, let's take a simple e-commerce or SaaS or marketplace model. Yeah, people are always like, that's commodity nowadays. Yeah, that might be true, but there is no like plug and play tech framework or tech solution for that you install within a day, maybe apart from Shopify for e-commerce, but even that takes sometimes and needs some tweaks. But especially like, let's say in a SaaS environment, there's still a lot of tech under the hood. And if you have a business model in a highly competitive situation or landscape, then it's crucial that your product engineering delivers at very like fast iterations and a lot of value. And if that is not the case, you just might lose the race, and then you might have the most sophisticated business model or the best whatever. You will not win the race about market share. And this is why I always try to encourage investors, even if it's commodity, to look closer at it so that we can give some recommendations how to make it more effective or more efficient, or whatever it is that you need to do in order to loosen the brake.
Yeah, yeah. Those are two very good insights. Definitely, definitely. Could you maybe walk us through the key components of a comprehensive tech due diligence process, and maybe part of the framework? I don't want you to reveal your secret identity at Philipps and Byrne, but if you can reveal some part of it.
Yeah, of course. I mean, of course, you start with the investors. You really want to understand their motivation, why they're investing into something. Then, on the other hand, on the founder side, it's important to create transparency very early on. They need to know, and they have a right to know what is expecting them, and also to build that relationship, right? And then, of course, you have a lot of data ingestion and processing, like automatically or manually, like through the data room or similar sources. And then, I mean, I know that this part is handled very differently across the industry. Like, we still heavily rely on interviews because, as I said, I believe in people interaction combined with data. So that's the interview phase. And then last but not least, there's of course the aggregation phase with a report as a deliverable. And we are always big fans of discussing the report, not only with the investor side, but also later on with the founder side, so that they get the most of it, the most out of it.
Yeah, and in this process, how do you assess the scalability and future readiness of a startup's technology platform, in general?
Yes. From a technological point of view, or let me start differently. First of it all, we want to understand the business, not challenge it, but really understand it, because I'm a believer in context, and
Yeah.
the business case and the growth strategy are the context for tech. And after we have understood that, when we look at technology, we look at the architecture, because the architecture in the end is the reflection of the business that you build translated into technology, plus like organizational setup being reflected in technology, information flow, so to say. So we look in detail into that, and also like into infrastructure. We very often have conversations about it, like kind of in-depth architecture workshops on a whiteboard, making it as visual as possible, because I mean, I also learned very early on that people speak very different languages, assuming they mean the same, but they don't. So visualization always helps. And like in addition to that, we also do detailed analysis of data, of course, but we also do live reviews, for example, of monitoring dashboards or similar things, because that is always fun, and also speaks, let's say, speaks also another truth than just looking at architecture.
And if we move on to kind of discussing risks, what red flags do you commonly encounter in this process, and how should companies address these prior to even going into a due diligence process?
Yeah, I would say there are a couple of things, and again, it always depends on the
Yeah, of
context.
course.
If you talk to a VC about a Series A funding, it might be an entirely different context, rather than wanting to sell your healthcare company to a big corporate, right? I mean, what might be considered a red flag in the letter will maybe not make a VC raise an eyebrow. I think that's the reality. But let's stick somewhere in the middle. I mean, one thing, especially like when you're about to really scale, you should make sure that you don't have any hygienic issues that just inhibit your growth here. such as some legal stuff. Yeah, that for example, you had these 10 freelancers in the first 2 or 3 years building your software, but you never made any contracts with them. So the IP question is unclear. That would be, for example, a very unfortunate situation. Then that doesn't say anything about the quality of your tech or the quality of your business, but it will give you a headache. So, and there are a couple of such topics, such as like GDPR or like open source software licenses, at least very strict ones. So, this is something that needs to be made sure that everything is in place here. And the other thing is the view on the organization. Do we have the right people and roles in place? And I mean, nobody is perfect. We know that. We come from the startup scene. It's always work in progress. However, at least if I'm a founder and I know, okay, 9 months from now we want to raise a Series B, then I should make sure that I have the key people on board, or at least most of the key people, and the other ones I should be at least looking for, so that one can see it's work in progress. Another thing is technology. When we look at technology, it should be always the balance. There's always this kind of fight, this power struggle between building it super lean and sometimes even quick and dirty, and shipping and speed is everything. And on the other hand, there's also this ambition to build toward the vision and to build it rock solid. And I think a good CTO always finds that counterbalance and manages to figure out how to build in fast iterations and in a lean way towards that vision. Does that answer your question, or?
Very much so.
Okay. Okay.
No, that's great. I think those highlighted some good red flags in that scenario, and I think the way you approached it is different angles, so it gives not just one answer but four, which is good. Could you maybe share an example where tech due diligence significantly impacted the outcome of an investment or acquisition decision? I understand that you might not be at liberty to disclose who and what, so if you want to keep it anonymous, no problem.
Yes. So I mentioned before already the highly competitive situations, and that is, for example, something in a DD. It's rarely just the one thing that is a big fat red flag, and then the investor backs off. And most of the time, it's either if there are question marks on the business model or on some other DD streams, and then tech comes on top, or it is a combination of various tech issues plus maybe a challenge in business. For example, highly competitive landscape, and we go in, do the tech DD, and come back and say like, whoa, tech has so much technical debt, so many things that need to be reworked in order to still have a good velocity in feature development, that they might be busy for the next 2 years just kind of cleaning up. They will have very, very slow output until they have cleaned up everything. So if that is the case, then we say there is barely any way around because they have already produced so much mess. That would be probably a deal breaker. Yeah? If it's in a highly competitive environment and everybody knows, okay, there are 10 competitors outside there, they will basically overturn them. They don't have a chance. The other way around, if for example, a company does something highly innovative and it's a big bet anyways, and they have the time because there's no competitor on the market anyways, the same issues we find might be more tolerable, and so it could be totally okay.
Right.
Yeah.
So it depends. Yeah. So again, it depends on the context, but there's just some general frameworks there.
Yeah. Or another good example is if a technology is absolutely not not suitable for a certain problem or for a certain context, or you already know, okay, the founder built it itself with Visual Basic or some like Code Fusion Pro. I think 3 years back I even saw something built in Code Fusion. I was like, wow, I thought that died 20 years ago or something. But I think that was a case where someone still knew it and thought it was okay and just built it. And as a prototype, it's maybe fine. But if it's already a production system, it will be pretty hard to maintain that over time, and also to find a team for that, right?
Interesting. And I think I have like spoken to someone recently about um no code, low code software builders.
Mm-hmm.
Their take on it was that for a prototype, until an MVP, it's okay. But they would rarely see it in terms of a tech business that following a certain stage, they should really think about building that in-house, right? From your perspective, what's your opinion on that?
Um, I totally agree on the prototypical phase or MVP phase. I think have as little effort as possible, and even if it doesn't totally fit, doesn't matter. Um, it's always a trade-off. I'm a big fan of buy overbuild. So also for later stages, if you have the possibility and something is not your absolute core, please, if there's any decent solution out there, buy the component, build a component that is like highly component based, like the components talking to each other via APIs, so a loosely coupled system, so that if you decide to kind of pivot your business, or like over time things become outdated, you can relatively easily unplug one component and plug in a new stuff instead of having to rebuild everything. Um, and that is the case if you have a lot of third-party components and kind of by decision in there. In terms of low code, no code, um, it's sometimes it works, but sometimes it's unfortunately an illusion. Yeah, and you're the adaptation or the customization rate is so high, and you didn't anticipate that in the beginning, and the complexity is higher than you initially thought, and then you might abandon that path and then eventually build something yourself. That's true.
Right. Okay. Very good food for thought there. And look, we talked about AI a bit already, right? But I want to explore a bit more about the integration of AI within the tech due diligence process. So in that context of AI and ML into technical due diligence, there's a spectrum of opinions on the reliability and depth of analysis compared to traditional methods. From your perspective, how can firms, and maybe how does Philipps and Byrne balance the efficiency gains from automation with the need for a nuanced expert evaluation, especially when assessing complex or novel tech environments?
Yeah, absolutely. So, I mean, that is something where I think the entire industry is still in a mode where we are experimenting and we are making assumptions, and we are building first product that support our work. But we all know that might be wiped off the table with the next release like, for example, GPT-5, yeah, or some other technology that kind of is another paradigm change. However, so I think it forces all of us to be even more data focused and data driven, which is a great thing. As I said, we ran experiments on anonymized DD data, and what we saw here, even with GPT 3.5 and 4, for simple context, the results are already pretty surprising. So reality is rarely simple. When we fed it with more complex, multidimensional context, then the limits were reached pretty quickly, and the analysis became quite shallow. But I
Yeah.
mean, that is changing on a almost daily basis, I have to say. Yeah? Like 3 months ago, our like experiments on architecture diagram analysis was devastating. Last week's analysis was quite promising. So I think it's important that you place your bets, or you exactly deeply think about how and where to place your bets here, um, that you increase your AI literacy in general as a consulting company. And apart from that, as I said before, like on the human side, like expertise, experience, and empathy, the three E's, will be still important for quite a while. Expertise, probably not that much anymore, because a lot of expertise will be substituted by machine. Maybe at some point also experience. The empathy part will remain for a bit longer. But I
Yeah.
think especially you mentioned the nuances, yeah, especially in the nuances, humans will have a few more years of leeway, I would speculate today.
Yeah, and I think it's more than a few years, in my opinion. I've spoken with a lot of investors, not about tech due diligence because I don't know much about it, but I know a lot about, well, know a lot. I know due diligence more, regular due diligence more.
Mhm.
And they say, especially in early stage, right? I'm not talking Series B plus. I'm talking seed, pre-seed, maybe a bit of Series
Mhm.
A. The team at the end of the day is the most important thing.
Mhm.
And I don't know if the AI will be able to discern Jack from James in terms of who can lead this team better, right?
Mhm.
I understand maybe from a tech due diligence, when you look at the data, that can maybe be analyzed quite shortly. It does it in a way that's maybe not great today, but you can see how he gets there. But analyzing Jack from James, from Emma, from Marie, I think that will stay difficult. But what are your thoughts on that?
Um, that's interesting, because that was, I think, my biggest USP when I started doing DD. Investors recommended me to each other because I was known as that person who also brought gut feeling into the discussion. Yeah, and it was I had a pretty pretty good quote, or how to say that, target hit rate, so to say, when it came to talking to founders and feeling whether something was off between them, whether there was an elephant in the room, whether there was a hidden conflict, or like how they interact with each other, what kind of standing the CTO has on among their C-level peers, stuff like that. And that is, even today, that's still, I mean, that's still a topic that is still, as you said, team is focus point number one, and that is something investors want to know. They want to
Yeah,
know who to deal with. Yeah, absolutely, and that's still a human domain.
absolutely. And look, for founders and investors listening, how does engaging with a firm like Philipps and Byrne early in the investment process help them?
It helps in the DD context, or in the DD phase, after the term sheet was signed, by like the hygienic stuff, like mitigating risks, identifying risks, etc. But on the other hand, I think the most important, or the most valuable stuff is probably like, okay, can we invest into that? And we answer that question very clearly. Internally, we always ask ourselves the question, if you had 50K as your own money, would you invest into that company? And that question helps a lot in order to make that recommendation. And we also get clear recommendations what to do after the investment. And that is a crucial point that I learned in my time as interim CTO and CTO, when I sat in board meetings, and I had the feeling, sometimes that's not the right discussion here. Yeah, because they didn't consider what was going on in product and tech and made plans without, for example, being aware um, of some things not being possible because of some limitations, some technical debt to deal with, or some other potential that was being left aside that could have been utilized, stuff like that. So, but especially in the negative topics, I like to address them within the DD, and I see ourselves and our work as a conversation starter between founders and investors to really address the difficult topics and turn them into a constructive dialogue. And I personally think that is the biggest value that we give, but probably the investors see the biggest value in giving clear recommendations to both the investors, but also to the founders, and of course, including CTO and CPO, what to do next and how to accelerate growth and accelerate progress, etc.
Yeah, because I'm looking, at some of your clients, and it's pretty remarkable on the investor side. Notion,
Thanks.
Lakestar, Axel, HV, Early Bird. It's really remarkable. On the company front, it's also very, very impressive. So I think you mentioned earlier some things that sets you apart in this space, including bringing that dialogue and having that in-person interview, that face-to-face thing. But what other things would you say sets you apart in the market?
I mean, we spoke already about the zero bullshit rule, and as I said, that's my prime directive. So when we don't sugarcoat things. I mean, sometimes we kind of, as you said, sometimes it stirs things up if you don't sugarcoat and are not super diplomatic. But I think it's super important for an honest conversation and also for a tough conversation that is sometimes necessary. And that is definitely something both sides get from us. Another thing is that we have this startup and tech DNA, and sometimes even to a certain extent, the mini investors or wannabe investors perspective, because some of us have also several angel investments, so at least we got a glimpse of that perspective. And last but not least, we are techies. Yeah, we understand tech. What I see often in tech DDs is that it's a business DD with very superficial findings. And what we do is we start with the business model and this tech strategy, and then we go down the rabbit hole down to the very code level. We look at code, we look at data, we look at algorithms, we look at models, and not many teams do that in that depth without forgetting about the broader context and the business perspective. Yeah.
From what I've seen, also you do this quite quickly, right?
Yeah, that's true. But I think that's the nature of the business. If you work with VCs and founders, everything needs to happen yesterday. And I personally enjoy it, even if it's stressful. But that's exactly that speed and that this what's the name, like frequency or rhythm that shapes or like kind of characterizes the industry. So I love it. Usually it's 2 weeks or something. We have time, including prep and report and everything. Sometimes it's 4 days. Then it's a bit stressful. So I don't want to burn my team and do that every week. But yeah, I like the speed of our industry.
That sounds great. And looking beyond conventional markets that you might be used to, maybe European, and I don't know if you guys deal with American markets, but by the looks of it, you do. How do you assess the potential of tech startups in emerging economies? Is it very much a similar framework, or do you look at it from a different angle?
No, it's basically the same framework, but you need to be aware which market you look at or which country. I mean, we have worked in, I think, 25-ish countries. Most of them being in Europe, but also in North America, for example. or in Southeast Asia. So we know the markets very well. And for example, to pick an example from Southeast Asia, if you look at Singapore and Malaysia, yeah, very, very close by, but totally different markets.
Yeah.
Because the salaries in Singapore are so much higher than in Malaysia for tech people, for engineers. So everyone who is more or less independent goes to Singapore. That leaves Malaysia with quite a talent drain in the engineering space. Yeah? So if you want to build a startup in Malaysia, you need to work very, very hard to recruit great tech talent there. And you also need to pay above average salaries. So that is one understanding that you need to have if you assess certain local markets. Another one is that surprises me quite often, that despite all the globalization and globalized tech community, there are always still, let's say, technology hubs in different areas or countries. For example, Eastern Europe. In Eastern Europe is C Sharp and .NET are much stronger than in Western Europe. So that is something that keeps surprising me. I think in generally you can say that the US still has a big advantage in terms of best practices and tech talent, density and um, spirit and attitude. I still find that when I work with US companies, it's not like in 2010 or so when I had the feeling Europe is 20, 25 years behind. Now I would say it's maybe 5, but still you can feel there's in most of the cases still a difference. But I think the European scene has caught up a lot. And also like the scene in non-American or non-North American and non-European countries has like has really caught up a lot. Of course, also because the differences due to remote work and a more globalized community have been also equalized. So and that's a huge chance for emerging markets, especially also in the times of AI, where at least that's currently the assumption that organizations will become much leaner and the capital that you need to build a company will also be much lower. So I'm very much forward looking to the next years what will be emerging in terms of startup scenes.
Yeah, definitely. And I think, I'm conscious of time. We have a couple more minutes, but
Yeah.
with regards to remote work that you mentioned there, is that something that
Mhm.
comes into the framework when you're doing tech due diligence or not really?
What do you mean exactly? Can you elaborate on
Like, for
that?
example, if the development team, the product team, the tech team, whether they're remote workers or not, does that affect the due diligence at all?
Yeah, I mean, of course, we look at it, and the fact that there are more and more remote teams has also massively influenced our work, because pre-corona, in 95% of the transactions we were on site assessing the team that was also on site. Then corona came, we all had to work from home, but post-corona, the majority of the teams we need are working either partially or entirely remotely. So there's no need, or also that doesn't make any sense for us to be on site because the developers aren't, and we
Yeah.
want to meet them in their natural habitat. So we switch to remote in these cases because we want to see how they work on a day-to-day basis. Um, so yes, we always look at it. What is the case here? We look whether it suits the company DNA and how the
Yeah.
rest of the company works, and whether they have the right tooling in place, the right processes in place, and whether the alignment is still there. Because still, achieving great alignment in a remote setup is still a struggle for many companies and many leaders, particularly.
Yeah, yeah, yeah. And 3 more questions. 2 are quite
Okay.
rapid fire. Um, For the investors in the audience, could you share one piece of advice on how to best prepare for a tech due diligence? Just one piece of advice.
Yeah, investors should exactly know what they want, why they want to invest, and what the expectation is for now, what they expect us to find, and what their expectation is for the next year or two. That helps the company to negotiate expectations and see whether they can meet them or not. And also it helps us, of course, in our work to make a realistic assessment. Is that what you mean, or do
Yeah,
you
yeah, yeah,
mean
yeah.
something
Yeah,
else
no,
in terms of
no, that's what
expectations
I
or
mean.
advice?
No, no,
Yeah.
no, that's what I
Okay.
mean. And now turning it on its head for the founders in the audience, let's assume maybe that they're about to open a round. What was one piece of advice on how to best prepare for a tech due diligence for them?
On the founder side, I I like to say that always lead your department in a way that you always could have a tech DD coming within the next 3 months. So have your stuff in shape. But because in the end, I mean, apart from a few bureaucratic requirements, 80%, maybe even more, of the information that are being requested and also assessed in a DD should be there already and should be kind of working artifacts that you use in your day-to-day life. For example, architecture diagram, that should be a living document that your teams use in order to make sure they speak the same language. So it shouldn't be prepared for the DD, it should be there. Same with a lot of knowledge. That advice I can tell to founders and particularly CTOs. I learned that tribal knowledge is something that will cost you a lot of energy and a lot of confusion, or it costs you a lot of clarity as your company grows. So write things down. It might be annoying, but it will save your life.
Great. And finally, how can interested parties get started with you guys from their tech due diligence needs?
Yeah, just ping us. I mean, we are there on all channels, LinkedIn, email, or phone, or whatever. So reach out. You can reach out for regular investment DDs, but also M&A on the buyer side, and also founders who want to sell their company in a few months and they want to have this health check beforehand in order to avoid risk in the DD process. And also, if you just want to have an internal feedback and health check, we are there for you.
Fantastic. And yeah, first of all, thank you very much for joining today, Chris. It's been an absolute pleasure. And for everyone joining us, thank you very much. We'll have a couple of links in the description with their website, with Chris's profile on LinkedIn. But yeah, thank you very much for joining us today, Chris.
Yeah, it was a pleasure for me too. It was really fun. Thanks.